All this may be good for your 401k, but what does it do for everyday working families? We welcome certified financial planner David Ray to help us sort out all of this. And David, is this just another example of the rich getting richer?
Well, you do have to play to win. So if you're not investing at all and you don't have any money in your 401k or an investment account or retirement account like an IRA, this isn't going to benefit you at all.
When it comes to Donald Trump, I mean, we have seen this market move from basically the minute that he became the president-elect. When he becomes the actual president after his inauguration on January 20th, do you think that the happy times will continue? Because he does have to get down to business at that point.
It's a very interesting question, and I think the markets don't like uncertainty, and when we're having an election, it's a pretty uncertain time, whether it's going to be Hillary or Donald. Now we know it's going to be Donald. So we can give some of the bump to that, but he is going to have to lead, and he is going to have to do some of the things that he's promised, and he's promised a lot to a lot of people, and it's going to be interesting to see how that really plays out for the average American.
Also, David, do you think that the appointing of several Goldman Sachs executives to his cabinet is also helping the stock market kind of rally?
Well, you know, it's hard to say if that's going to help the average American, but I do think with those people in his office and his cabinet, you're going to see some things that will probably benefit the stock market. And if you're participating and if you are putting money in your 401k, it may actually benefit you as the average person planning for retirement or trying to buy a house or all those other fun things.
Clearly, the rich are heavily invested in the stock market. But what about, as you said, the average person who might not have many stocks or maybe no stocks at all? When we see stocks move like this and we hear about these great times, do they get any benefit out of this?
Well, I'm hoping that this will be an impetus for some people to maybe sit down and take the initiative and start a financial plan, start putting money in your 401k so you can participate. The market of the long term has gone up, and a lot of people have missed out. There's still a lot of people who freaked out in 2008 and have their money sitting in the bank or sitting in cash in their 401k, and that's just not going to get you where you want to be if you want to retire at any comfortable lifestyle.
So if you're saying that people can sort of get into the game, is there a certain amount that you say to start, or do you just start with $50? I mean,
whatever you can start with. I mean, obviously you want to save more. The more you save, the more benefit you're going to get, but the important thing is to get started. You're going to put in 1%, 2%, 5%, 10%. You're going to be getting ahead, and you're getting started. It'll be much easier to go from 1% to 2% than from 0 to 1%. It's kind of once that ball is rolling, you go, oh my gosh, I don't even miss that. Absolutely look at your 401k or your retirement account at work and see if there's a company match. That's free money. So you might be able to put in 3 or 6% and get 3 or 6% more. You're automatically doubling your money right there tax-free. It's like a raise, and you don't have to pay taxes on it. Even better.
Even better.
Well, David Ray, great advice. And by the way, if you want to reach him, you can find him at financialplannerla.com. Once again, financialplannerla, there it is, .com. You could reach David and get some of that fantastic advice that he has to get out there.
David, thank you so much for joining us.
My pleasure.
And let's talk about our weather.